Ted Cruz just dropped a bomb on the Tucker Carlson podcast, letting everybody know that the U.S. is behind the Israeli attacks on Iran.
You don't
said it was
believe
bad.
they're trying to murder Trump.
Yes, I do.
Because you're not calling for military strikes against them in retaliation. And if you really believe
we're carrying out military strikes today.
You said Israel was.
Right, with our help. I said we. Israel is leading them, but we're supporting them.
And while you may think that's right or wrong, that's not what I'm about. I want to know how that's going to affect you and how that's going to affect mortgage rates and housing. Here's a great example of what happens when the U.S. is in war. Following the 9/11 attacks, the average 30-year mortgage rate was sitting at about 6.9%. Now, as soon as the Twin Towers came down, so did mortgage rates. And the reason why is because there's something called a flight to safety. People move money, investors move money out of stocks, they move money into the bond market. That means the banks are able to borrow money at a cheaper cost and therefore lending you money at a cheaper cost. This ultimately dropped mortgage rates from 6.9 all the way down to 5.5 in 2003, only about a year and a half later. Now, why that's key is that 1.5% drop probably gave homeowners way more affordability, causing housing prices to actually increase during that span. There are some thoughts that actually is what was the beginning stages of what led to the 2008 housing collapse. And so as we start to enter this wartime, there is anticipation that there is going to be a move in assets from the stock market and into the bond market, because the bond market is known as a safe haven. But this is where it starts to get a little bit scary, because in 2022, when the attacks between Ukraine and Russia really started, you saw a short-term movement in what's called a flight to safety. People move money out of stocks, they put it into the bond market. Same reaction, the cost of the bond drops, mortgage rates drop, house prices get a little bit of a push. But quickly that reversed. Now, when geopolitical conflicts happen around the world, we're not seeing that typical behavior and the move in a flight to safety. And the reason why is because there's a lot of fear in what the US is doing and how much debt the US is carrying. They're having to issue a ton of debt just to cover the $36 trillion deficit that the US is carrying right now. And so because of that, investors are now moving their money into different safe havens. Countries like Japan and China, which were major holders of US debt, are now offloading their positions. And so in order for the US to incentivize people to buy their bonds, they're having to keep the rates elevated. Now, right now, the federal fund rate is sitting at about 4.3%. But why wouldn't anybody buy a 10-year bond at 4.3% when the fear is that inflation, while sitting right now at about 2.5 to 2.7%, why would they go and buy this bond at a 4.3% and locking their money up for 10 years when inflation can go up? Now, war in the short term will cause the Fed to lower the federal fund rate, causing rates to drop, but then inflation kicks in. And so in the midterm and the long term, rates start to go up. So one of the reasons why this conflict with Israel and Iran is so crucial and can really jeopardize the US economy and especially the US housing market is because of the energy inflation. The Middle East is a mass producer of oil. And so with us going into war with Iran, oil prices are going to skyrocket, which means energy prices skyrocket, transportation skyrockets. That's going to cause inflation to rise. And so that fear of inflation rising back up over 3% de-incentivizes any investor from going and moving their money into bonds. Instead, they're putting the money into gold. There's some argument to be made that they're even using crypto as a safe haven. And so it's pretty scary to think that what was once known as the best investment, buying bonds and a way to hedge your portfolio, is now being looked at as a major risk. And so if we don't see that behavior where we go to war with Iran and money doesn't get moved into the bond market, causing rates to drop, and you see investors moving their money out of the bonds, causing rates to actually skyrocket, the housing market and the mortgage market are absolutely in trouble. And so what you need to do to protect yourself is you need to take advantage when there is that short-term window. In 2022, that window lasted 2 weeks, where the 10-year dropped to almost 3.8% and mortgage rates were sitting at about 5.5% for FHA and VA. And so you have to be prepared for that window of opportunity and rates to come down. You need to refinance, or if you're going to buy, you need to buy at that point. If you need to make a move by sell and buy, you need to do it within that short window. Because as soon as that window closes and investors get their money out of the bonds or start to move their money elsewhere into a different safe haven, whether it's gold, whether it's crypto, whether it's investing in another country's bond market, at that point, you're SOL, because the inflation, the energy inflation is going to kick. Inflation will tick back over 3%, and now the federal fund rate will actually have to increase. And while we're all waiting for Jerome Powell to decrease rates, this could absolutely jeopardize everything that we've done over the past 4 years to get inflation under control. And so to summarize all of this, with Ted Cruz bringing to light really the US driving a proxy war between Israel and Iran, and really it's the US going to war with Iran, you're going to see this short-term flight to safety. You're going to see the 10-year bond come down, and you're going to have a month, 2 months, maybe 2 weeks to refinance your loan, to go buy your house, to get your rate locked in, because once the money gets moved out of the bond and people stop wanting to invest in the US and oil prices start to surge, inflation starts to surge, you're going to see rates go back up. And so it's a very short Christmas for everybody in the real estate market. So you let me know how you think this potential global conflict is going to affect the mortgage market and the real estate market.